Starts to 2011 for the markets, but I'm sure volumes must be pretty thin and not much out there to give us direction at this stage.
Absolutely, Stephen, and a happy new year to you and to all of the viewers out there. Trade's still very much thin right now at the moment in terms of a lot of your foreign markets, as you mentioned earlier, still closed today for the holiday season. Likely to see a lot of activity picking up, especially from tomorrow when the minutes from December's US Fed meeting will come out, likely just providing a bit more information in terms of their thinking, but likely to still highlight their concerns over a weaker economy and high unemployment numbers. That being said, a nice positive start to the market today, albeit with very thin volume.
In the meantime, we have had some news coming out from the Far East that China specifically, after raising interest rates by 25 basis points on Christmas Day, we had some PMI numbers out over the weekend in China, and that manufacturing number disappointing slightly, coming at 53.9. That's down from 55.2 in November. So it looks like some of the efforts of the Chinese government to slow down that economy and to bring inflation into check are bearing fruit there.
Absolutely. I mean, the interest rate hike that China looked at late last year, as well as the manufacturing number that came out, certainly highlighting that, putting the brakes on from China, starting to come through in the market. That being said, China is still very much seen as the engine for global growth. So will certainly be one of those factors to watch very closely in the new year. The Chinese obviously not going to want to cool down that economy too rapidly. That being said, if the rest of the world really is relying on growth solely to come through from China, and if they continue to put those curbs on the economy, the ramifications for other economies, in particular an economy like South Africa, which is heavily geared towards resources, would obviously look at suffering if the Chinese slow down a little too much.
So China, one of those risks that lie ahead. We also have Europe's sovereign debt problems, which may have gone out of the spotlight over the past few weeks, but certainly haven't gone away. That's another issue. And of course, jobs in the United States. And we are getting those non-farm payroll numbers coming out on Friday. And those, I'm sure, will be key for equity markets going forward.
Absolutely. I think the unemployment number in the United States quite critical. That number has been rather stubborn throughout 2010, and it'll be interesting to see how much their efforts in terms of quantitative easing will actually have, what kind of impact that has in terms of the jobs market. In terms of China as well, really important to see how that manufacturing pans out. And in terms of global trade in general, coming out of Europe with regards to the sovereign debt crisis, again, not out of the woods yet. It will be interesting to see what the policy response is going through 2011, but also quite interesting seeing China really looking at buying up a lot of European debt. Last week sometime there was some news about them actually buying up Portuguese debt as well as Spanish debt. So that should look to actually ease some investors' concerns in terms of the Chinese really also looking to diversify some of their exposure in terms of their foreign reserves.
Perhaps a risk that's just for our equity markets, and that's the rand at this stage. Last week trading at 658, just above 660 today. And although it could be good news for some, it is bad news for some of the counters on the JSE.
Absolutely. I mean, the rand really has been fairly strong over this trading period, also on thin trade, but when we breached the 675 level, which was the last technical trading level, the rand really ratcheted quite a bit stronger, trading slightly weaker in this trading session, but if the rand continues on the strengthening trajectory, the next technical level arguably could be around the 640 mark, and if we breach that, the potential for the rand to get a lot stronger is definitely there. The ramifications for local producers, in particular exporters, could be quite severe, and we should be seeing that coming through in the next earnings season. An interesting thing there, Stephen, as well, is that the rand being this strong has certainly protected the South African economy to a large extent in terms of the imported inflation and the risks there of the rand actually depreciating rapidly if this trend does reverse would have serious implications in terms of the inflation expectations for South Africa.
Well, just with the rand and lights, would you be taking quite a cautious approach then to some of our resources counters and some of our exporting companies?
Stephen, one of the important things with regards to a lot of our resource counters, as you mentioned, is that as the resource prices globally strengthen, so does the rand. And as a result, the rand price realized for a lot of the minerals that we get out of the ground tends to trade within a very specific range. At the same time, however, we tend to be faced with rising cost pressures from our miners, particularly labor costs rising. And that does place significant margin pressure on a lot of our miners. So if I were to be looking at our mining sector, really would look at your more diversified miners in terms of those that have operations both in South Africa as well as globally.
Many of those diversified miners, though, did have a pretty strong run towards the end of last year. We have a BHP Billiton trading at 267 Rand, Anglo American 350 Rand or very close to that level. Do you think there's still some value in these counters?
Well, it's interesting to see what's happening in that space. I mean, news recently out. In fact, this morning I saw that there was some speculation that BHP Billiton, after its unsuccessful bid for potash in Canada late last year, is now looking at Anadarko, which is a petroleum player in the United States. Now, the interesting thing there is that a lot of these corporates, Stephen, are actually faced with very strong balance sheets, large cash balances on those balance sheets, and they're going to be facing significant investor pressure in terms of deploying those cash balances either for further growth opportunities. And if they're unable to find those growth opportunities, shareholders are really going to demand that that money be returned to shareholders if that value cannot be delivered through the company.
News of that Anadarko bid, I think, resurfaced towards the end of last week in the foreign media. We see BHP Billiton shares up by about 0.6% this morning. Do you think that the market likes this? Do you think Anadarko would be a good fit for BHP Billiton since it couldn't go ahead with that potash bid?
Well, Stephen, the interesting thing there is that BHP Billiton has been facing numerous hurdles in terms of a lot of the acquisitions that they have been exploring throughout 2010. And that's on the back of regulatory concerns that they really do have a very dominant market presence in a lot of those sectors of the resource market. That being said, Anadarko, a petroleum player, arguably a space that BHP Billiton doesn't have a very large presence in. So as a result, potentially BHP Billiton focusing on sectors where their presence is not necessarily large and overbearing on the market could be a good strategy going into 2011. That being said, investors should be quite cautious if companies start looking to do deals simply because there's pressure to do deals. Value needs to be found in the deal. And again, a lot of the Anadarko talk is quite speculative at this point in time. So very difficult to say whether there is any value in the deal for Billiton shareholders.
What would your preference be? Would your preference be for those companies with very strong balance sheets to do deals or to return cash to shareholders via dividend payouts or perhaps share buybacks?
I think, Stephen, it really does differ depending on the company in question. If one has a fair degree of faith in terms of the management of the company, one would obviously like that company to pursue or to aggressively pursue acquisition opportunities, provided that the price paid is not too high. So, I mean, any investment that is pursued will need to be looked at on a case-by-case basis. That being said, you know, one should be very wary in terms of these companies paying up for these opportunities unless it can be actively proven that they can add value by adding the new acquisitions into their mix. One would need to be quite skeptical about effectively pursuing acquisitions for the sake of acquisitions.
Of course, M&A activity was one of the themes last year in the markets globally and here in South Africa. A number of those deals didn't happen. Some of them are still to go ahead, such as Walmart and Massmart. Do you think we're going to see more M&A activity in South Africa this year?
Stephen, the interesting thing in the South African market is that with the cheap money that we've seen globally and with the fairly strong balance sheets of corporates on the global arena, a lot of them have been identifying South African companies as good value plays. So arguably South African companies on their current earnings multiples looking cheap compared to many of their global peers. As a result, I think the potential certainly would be there for further M&A activity. However, you know, again, if that impetus, if globally the picture changes, if the cost of money starts to increase and the global economy starts to falter, arguably that activity would dry up. However, you know, everything staying the same, arguably will still be a recurrent theme throughout 2011.
What's your expectations for the equity markets for 2011? We had the all share up about 16% last year. We had the Dow up by about 11%. Do you think we can repeat these performances this year?
Well, you know, that's a very big question, Stephen. I think, you know, it depends very much in terms of the regulatory response globally. If the US continues to pump a lot of money into the system using their quantitative easing, and if Europe continues to effectively look at quantitative easing as an alternative to very strict financial austerity, arguably would be very bullish for the equities market. That being said, you know, over the last year, we're looking at 2010, a very mixed performance looking across the sectors. Yes, the JSE looked at approximately, I think it was around 16% on the year. Not much of that coming from traditionally the resource sector, not much of that coming from your financial sector, but the real gem over 2010 was the industrial sector, with a lot of our retailers in that space. Arguably, going into 2011, your resources potentially hold a lot of promise, but also a lot of risk. I'd be quite cautious on your financial sector. I think with interest rates falling, your banks and arguably a lot of your life companies would be facing a lot of headwinds in that space, in that kind of environment. But I will also be looking specifically at stocks in your industrial sector and looking at relative plays in that sector to see where value really should be eked out of that market.
Resources, of course, to some extent must be dependent on what happens in China. What's your outlook for commodity prices for this year?
Well, again, as per my previous comment, depending on the regulatory response globally, if everything stays the same, if the world stays committed to keeping a lot of money in the system, and all indications are that they will, obviously with the concerns of employment and growth out of the US, which is the largest economy, with all of that staying the same, arguably very bullish on commodity prices as a whole. And it's really now about seeing whether that consumer spend does materialize out of the States. Because as you mentioned, it's all well and good the Chinese manufacturing a lot of the goods that the developed world needs, but a lot of that money still needs to find its way through to the consumer. And if that growth is solely premised on credit extension to the consumer, now it's a question of how sustainable that growth is and whether we actually see that pullback coming in 2011, or if that is actually pushed out further into 2012 before the business cycle actually does correct.